I think the first thing was we knew this price increase was coming in the U.S., but it's actually international as well in some of their more mature markets. So they won't be specific, but numbers are going up this morning, and that's a big part of it. I think the guidance for contribution profit for international is 10% above. Also, I think there's confidence around the lack of elasticity. So really, that this is a company who believes they have pricing power when you just saw Hulu lower prices in response to this. And then
by the
again,
way, are you a believer that this pricing power sticks? Can they do this?
Yes, I mean,
problems?
the first time they raised prices, it was very convoluted, 2 years, grandfathering. The bottom, there were people who forgot they were paying. You got the email reminder and said, oops, why was I paying? So it does look like this time there will be less of an impact. So you'll start to see it in the fourth quarter, and then it'll continue to the first quarter, but they said it'll be quicker. But I think if you just take a step back, the reality is, global subs grew 26%. That was faster than the 25% in the second quarter. Revenue grew faster than global subs, up 33% for global streaming, and contribution profits were up 52%. So how much better than that do you want?
Right. Ed, I think the content piece was kind of amazing. The idea that they're going to spend up to $8 billion.
So it's not $7 billion, it's $8 billion.
Right.
It's more than you thought it was, or that they originally said that they were going to spend. So my question, though, on that is, all the originals that they're spending on, that he said in the call, about 25% they're spending on originals. Originals is pretty loosely defined at Netflix. It's stuff that runs first on Netflix. Doesn't necessarily mean it's stuff that they own outright. So like Game of Thrones on HBO, HBO owns it outright. They can keep showing that forever and ever. Sopranos on HBO. You're a new subscriber to HBO, you can just turn it on and start watching it. If you're a later subscriber to Netflix, it's not always clear what of those originals are still there for you to watch. So they're spending a lot of money, that's great. How much of it they fully own is still a question.
What's the concern, though, in terms of the leverage issue? At some point, there was always a view that at some point you wouldn't have to necessarily keep creating absolutely new content, right? Or and keep the marketing spend at the same number to grow. Given that you'd say you have a base, the point is to distribute it. That's the business. However, they keep to grow. They think they need to keep spending the money.
They need to keep, I think that's right, because a big part of their conceit is international expansion, right? And part of the way they do that is leveraging the content they already own. So if the rights for some of the content is still kind of unclear as to which regions or what length that they own it for, it's harder to attract new subscribers in those new regions. And I think that's a big
So you think it's going to go just to boost up the regions, same content?
It's partly to boost up the regions, but also, as I said, just sort of the long-term value to the subscriber and to newer subscribers later that, we spent all this money. So that needs to flop more towards owning it outright. And I think that's where
that's the issue for you?
Well, look, they said 40% contribution margins, which is marketing plus content is how they define it. And they got there in the U.S. and they said, okay, we're going to now invest under that, but we've proven to you we can do better than that, and so hold that out. But then international, you're well below. The guidance was, or they did 5% in the quarter internationally, and they're guiding to 7% in the fourth quarter. So clearly,
5%,
contribution margins, right? So basically, they're taking the U.S. profit margin down, international improving, and now you have this pricing increase coming. So all else being equal, right, that pricing increase would raise the margin, but then they're investing against it. And they talked about, well, we think if we spend a certain amount of marketing in the U.S., there's a word of mouth effect where we get this benefit globally. Look, I think the bottom line is if you took a step back 7 months ago, 8 months ago, you'd say Amazon is making some pretty good progress here.
Sure.
But yet it seems more quiet on the Amazon front because doing content is hard, right? And this company clearly has an international advantage. So what can they do to sustain that advantage? And then you do have content that we know that's rolling off. Disney, for example, over time they will lose that content.
Do you buy the stock here?
Yeah, we raised our price target to $245, so we think there's more to go.
It's trading at 205.80. Okay, great. Gentlemen, thank you both for joining us today. It's good to see you.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.